Pot stocks are lit, and they're not showing any signs of cooling off. Dom Chu's back at headquarters with all the details. Hey, Dom.
Well, Melissa, some traders have been cooking when it comes to cannabis these days, and over the course of the last month, the returns have been pretty astronomical. That's really the performance-chasing aspect taking place. Now, many of the U.S.-traded shares of Canadian cannabis companies have seen their values soar, like the depository receipts for Aurora Growth, which is a Vancouver, British Columbia-based medicinal marijuana company. Over the last month, shares are up roughly around 35%. One of the more familiar names in cannabis comes via Canopy Growth, also based north of the border. This company made a lot of waves when it got a massive investment from U.S. beverage alcohol company Constellation Brands. Shares of it up around 85% during that span. Cronos Group is a Canadian investment company that specializes in, yeah, you guessed it, marijuana. They've doubled over the course of the last month. And then a recent IPO, Tilray, is up around 230%. Now, it went public back on July 19th at $17 a share. It's now in the mid-80s after getting as high as over $97 just last week. No doubt cannabis companies are hot right now, but those big gains in such a short amount of time have stoked some skepticism, and there are some worries that without a new round of catalysts, Melissa, there could be a deeper pullback that even still keeps that shorter and medium-term uptrend possibly in place. Back over to you guys.
All right, Dom, thanks. Dom Chu in the newsroom. Well, our next guest says the hot pot stocks are just going to heat up even more. Chartmaster Carter Worth of Cornerstone Macros at the Plasma to break it all down. Hey, Carter.
I think that's right. I mean, we're going to look at one or two names, but conceptually, it's still early goings in what should be a global growth phenomenon. And we can talk about that in a bit. But let's zero in. I wanted to pick a sort of small one. Nice name, Organigram. This is the ETF, or excuse me, or the ticker if you want to use it in the U.S. It's a Canadian stock. But I wanted to focus on what is the very definition of price-volume correlation. So the important thing is this, is that when you have a heavy volume upthrust, you're basically getting signs of accumulation. And that's what this is all about. So that essentially, right, when the volume spikes, you get a big move in price. Volume spikes associated with big moves in price. And that setup, if we just get rid of all this, right, is a textbook, well-defined tops, and it looks like we're just going to break out again, yet to the high, new highs. Now, on to the next. This is the big name, and you all know it, but it's the same principle. Essentially, big bouts, heavy volume upthrust, do the lines different way, and then it's accompanied with heavy volume, which is to say signs of accumulation, insensitivity to price, people buying up regardless of how much. But the key to both of these, they're above their January highs, and that's not the case for the general aggregate. So if you look at this ETF, and this is either the opportunity or the issue. Basically, as an aggregate, pot stocks all peaked in January with the market and have yet to recover back to those levels. But based on, again, this recent heavy volume accumulation as we approach the former high, my thinking here is that we're going to now exceed the high and that you've got quite a good setup for a big breakout. I like the theme, but again, you can pick the wrong one. One way to do it is to stick with an aggregate like this.
Carter, why don't you come on over? Michelle will bring the chair in. Thank you, Michelle. You know, last week, Carter, we were making the comparison between crypto and pot stocks.
That seemed absurd to me.
Okay, well, let me just. Okay.
What do you really think?
The fundamental reason aside, but in terms of the chart, right? Bitcoin prices in December rose exponentially and on heavy volume, and so is that similar to what we're seeing here?
To compare an operating business, right, that has ultimately a long-term future growth path that one can analyze in a fundamental way, right? Decide what kind of cash flow, what you want to pay for it. At some point, that's not what a crypto is, right? A crypto is analogous to gold in the sense that it's something that one can speculate on, but you cannot assign any quote. You can't. There's not. There's no management. There's no.
So you dismiss the chart on Bitcoin, even if there's similarities on the surface, at least in terms of the price and the volume.
Between Amazon when it was going, right? There's always similarities between people behave in the market. But I think the key is here that these ultimately are businesses that whether this one survives or that one is not so much. It's just the beginning of what should be a big growth.
Carter, let me ask you this though. So people bought Bitcoin at 19,000 and were hurt because we had this parabolic rise. What should people look for for in these stocks technically to say, hey, you know what, maybe I shouldn't be buying at these new highs?
Well, for starters, the rise here is nowhere near, of course, as you know, to the move in Bitcoin. Yeah. Bitcoin was multiples in excess of this. But it would be simply this. Individual names not participating, but we have a little bit of that. But as of now, you've got key names making noise. And let me just put this in the context. We know that great manias happen, and then you work out the excess. This happened in the railroad mania in the 1840s. It happened in the South Sea bubble. Meaning, at some point, there were, you know how many soft drink companies there were? There were 200 in the United States. Now there are about 6. The point is, yes, that we'll work away, we'll get rid of the excess. But is this as a theme enduring? For sure.
Is it part of this a scarcity in terms of the amount of stocks you can invest in? Will the success of the industry lead to sort of the sell-off in the group on a whole? In other words, more and more companies go public. You have more opportunities to invest. Names like Tilray that have been parabolic will sort of get spread out across a broader swath of stocks. Is that possible?
I think there's that. And then also there's something else that speaks to the enduring nature of it. Think about what happened with Uber, and then all of a sudden big auto manufacturers said, hey, I'll have some of that. Big contributions. I'll invest 500. That's what we're seeing now. We all know the Constellation Brands news, and we know the M&A activity. It should be, in principle, early stages.
Are you in Organigram right now,
Yeah,
Tim?
I'm in Organigram. And again, there's someone that has an international strategy on valuation, and they're significantly cheaper than some of the big boys up there. Look, what's going on here, what Carter talked about with the volume moves is totally, to me, the ETF world. There's so much torque attached to these ETF creates that then pushes around $300, $400, $500 million companies. I mean, yes, we're seeing Tilray and Kronos and some of the big boys move around Canopy, but a lot of this is just the dynamics of getting more liquidity and how it comes into a sector. The comparison is only about these are new asset classes, and they're under-invested asset classes.
Let me ask a question of you. As an investor in the space, does it matter to you where that trading volume comes from? Does it matter if the trading volume is mostly fueled by retail versus institutional money?
Yes, it does. But to be clear, it's a lot easier for institutional investors to invest in this market, and in fact, they are coming in a lot faster. But we often refer to, I've seen this in emerging markets. You see this in developing markets that are less liquid. You see the ETF-ization of your underlying market. And if you don't know how your stocks trade, you're dead. So bottom line here is you're seeing things get lifted up. But again, the fundamentals here, to me, are about strategics coming in, and I would say only 1/3 of this is about a rec marijuana market. This is all about global cannabis.
I hear you on the 1/3, and I still believe that October 17th, that rec marijuana date for Canada is a catalyst, along with the M&A opportunities. But I also believe you're going to see a major player, and I haven't heard Estee Lauder buy into one of these yet. I think you're going to see that for skincare.
In terms of the oils.
Well, wellness is, again, if you believe in this story, you believe in global dynamics of a consumer product story, of wellness, and of pharma. The rec story is great, but that's not a reason to have valuations where they are. And Canadian or U.S. market alone is not a reason to have valuations where they are. This is imputing a global and an international valuation to all these companies.
I presume you bring us cannabis charts not only because we are interested in it here on Fast, but also because you have institutions increasingly asking you for
for
these
sure.
charts.
Just last week, I mean, we ourselves had a conference, and that was a subject matter. But Barclays had the Consumer Staples Global Conference 3 days last week.
Right.
Constellation Brands chairman's on there talking about it. I mean, this is, it's new, but it's not nothing.